Welcome to Insights. I'm Eric. Thanks for stopping by today. We're going to talk about corn. We're going to do a corn review. We're going to do a short one. We're going to keep this open to allow people to see what's taking place inside of the matrix, in particular with corn. But we're not going to go into too much detail because this is a pretty important market. There's a lot of people who track this. We have a corn report that tracks this in pretty good detail, but we're not going to talk about the level of detail that we usually go in when we do those. But we're going to talk about a few things that we're going to give everyone a heads up to look for. We'll follow through with those inside the reports when the time comes. But the process of change is already underway, and we're going to just breach that here. The first thing we want to talk about is the evolution of the trade, and this is all markets. Well, we're focusing on corn, but all markets move through the evolution of the trade. There's four major phases. There's the nibble, flip, alignment and energy, which we call the reset, and then the primary trend decline. Corn is kind of stuck in between the phase 3, which is the reset or alignment and energy, and the primary trend decline, which you can see by the nomenclature here. We're primary trend decline 1, which is the phase. It usually marks the end of a phase because of the cycle readings. It's the beginning of the end, quite frankly, because this can go up a lot higher than this. This can go to PTD2. The reason the computer is concerned, and we talk about corn on a much longer term basis than we do inside these reviews. Corn is studied inside the matrix till 1959. It has also studied much longer than that. There's a database that goes back into the 1850s, and you have to understand that in order to really follow these cycles longer term. But we don't address those here in the review. We're going to address that in the report. Again, this is just something that we want people to understand. When you're looking or you've been following the matrix, maybe you don't necessarily follow corn, or you've been following it indirectly and wondering what are we doing with all these assets. Corn has been up for 19 months and it's produced 104% return. Now we're coming down from that. And there's a change underway, even though the primary trend is still up and we have pretty extended cycles. Readings above 2 are statistically extended. It usually means that a correction of some sort or pullback is due. You can see them on the weekly time frame. You can see them. This is the price cycle. This is the time cycle. T for time, BUS for price, and that's bull. This is BUS for the price cycle for the monthly time frame. Here's the time cycle. This is more important. If this was above 2, this would be a real warning. That's why this is scored PTD1, which is the heads up of a primary trend decline. Now, whether or not this exists on a longer term basis, that's an additional conversation. But the real change that we're talking about today, and after today, is that the composite trend, which is the direction compiled by the 3 time frames, currently they're up for the primary trend, up for the secondary trend, but now the daily trend, which is the tertiary trend, is now down. We have a breakout here, which is BO, to the downside. It throws corn into consolidation, or what we call cause building. It's going to take place, and how long is it going to last? Well, you have to know the median cycle for corn itself. If we click on lead D, we can see that corn in general has bearish impulses, and there's 36 of them on the bear side. There's 37 of them on the bull side. They average 4% to the bear side when the impulse does go down. But the time frame is what we're most important, and it lasts 13 trading days on average. So we're currently at 1. So once this gets going, you have a minimum. You tend to have a minimum of at least maybe 8 to 13 days, somewhere in that range. You can go a lot longer than that as well. But the fact is that the 3 time frames are no longer in agreement. So if you're thinking the path of least resistance is up, it may be as long as the primary trend is up, but all trends breathe, and this one is due for a breather. It was certainly due for a breather in the daily trend. These cycle readings in the bull side were much higher than this. Everyone who's tracking corn and tracking the reports knows exactly what we're talking about. The weekly trend still has extremely extended cycles. These could be dealt with. Perhaps they're dealt with right here and now, and that's what the risk. You have to understand, once a market falls at upside or downside alignment, the alignment of the three time frames, the risk for consolidation grows where the market breathes within the primary trend, and the process of breathing is just starting to take place. If it's a shallow correction, it'll only affect the daily. If it's a deeper one, it's going to go into the weekly. And if you have any cascading selling that starts to pick up, it could even address the monthly trend. And you have to understand what's taking place in order to either take profits, which should have been done a while back because the daily trend was so extended in terms of its cycles on the bull side. But if you're expecting higher prices when when the daily impulse goes from bullish to bearish, you're only kidding yourself. You're selling yourself some sort of narrative that doesn't exist, at least in terms of the visible hand. So keep in mind what's taking place. Now we can look at this in a greater detail. I'm not going to go too much into detail on this review because this is a review. The point that I want to make here is that the composite trend's no longer triple up. It's down on the daily, and this has a potential to infect into the weekly, and that is always a possibility. This goes for any market that's inside the matrix. We're just highlighting corn right now. But what kind of downside targets are we looking at? To do that, we have to look at the reversal tab. We track corn, which is CORN. It's an ETN. It helps us define, it's actually a merged product with the continuous contract in the futures market that goes back a long time, long-term data. And then over the short term, we merge this ETN into here. So it's not quoting the price of corn in the normal marker that most of you probably traded on the futures market. But that doesn't mean when the corn's primary trend or composite trend's not in alignment that all products will start to struggle. And that's exactly what it will do. And you're being warned that the consolidation has begun. In terms of what maybe the downside targets would be, I copied over the weekly gaps here from the corn box. You can find it by pulling this pull down menu. You can also pull down the weekly ones. And I brought them over into the weekly, into the charts here. This is the weekly price of corn, the corn ETN, and I pulled that box over. You can see the price of corn here currently, CORN, is 28.20. Now that's today's after day's price. We've fallen below some important reversals here. At 29 is right here. That's that red line. So it's now turned red because price is below it. We're kind of within an air pocket between, and we're at 28. To the next layer of support are these artificial gaps that the computer creates based on volume. It finds one at about 26.5, and then there's another one at 25.5, roughly down in there. And you can see them right here. They're painted green, that one. You can see a couple lines right here. And then there's some lower lines here around with a 23 handle. The real risk is that as the market corrects and deals with these overextended cycles, it takes the daily down to start out with, perhaps even takes the weekly down. We don't even know that. Anything's possible. And these are the zones that it's going to target. If we're lucky, it'll hold 26.5. 25.5, 25.4 to 25.67 is another zone. That's also quite a possibility. It's not likely going to stop inside this air pocket where there's no coloration or no colored lines. It's going to fall until you find something that impedes the progress. And that progress has got a 25 handle, 26 handle, and a 23 handle on it. And it pays to know this stuff, and that's what the matrix does. It helps us. These numbers are relatively static. You can find them in the reversal tab. They do change every day if you want to keep an eye on them, especially relative to where the computer sees them. But keep an eye on these numbers right here because that's what the computer is going to try and take out. Now that the bulls don't overwhelmingly control the trend, they still do overall, but the shorter turn has turned into a street fight as some of the bears have gotten a little bit of an upper hand. This could go on until some of these other time frames, particularly the weekly time cycles, which are enormously extended to the upside, an 86-week rally with a price cycle of 2.4 and a time cycle of over 4 standard deviations is incredibly high. It wouldn't even take the bull market out in order to turn the weekly down temporarily to shoot it back up again. And you have to understand what these risks are. You can't say I'm bullish forever without understanding what the risks would be even shorter term. And those risks are escalating because the composite trend is no longer in triple upside alignment. If we take a look back at the charts here, we can see these zones, and we establish where the handles would be on corn. Now, what's the most important piece of information in the coming weeks, and probably multiple weeks coming forward, and I'd say even months, is what is energy going to do as the price then tests some of these lower levels? And as it does this or even drops, is energy going to continue to move higher? If the invisible hand is looking to step in, DI and DI2, which are the blue and yellow lines, are going to move higher and move above zero. The higher they go, the more energy they show. And what we're also going to watch is WA in the process. Is the decline in price met with apathy? Is WA actually going to fall, which is the overall level of participation inside the market, the futures and options market? Is that going to fall as DI and energy builds upward, suggesting accumulation as price declines? We don't care what the internet or the majority is thinking. All we care about is the intentions of the invisible hand. Is it interested in buying, or is it interested in selling as price goes down? We follow DI and energy builds here in columns K, L, and M in the Trends tab. They're currently 63, minus 26, and minus 43. It's not just the overall levels of them, but it is going to be the directions in the coming weeks. As price curls back and turns down during cause building, which is the fact that the 3 time frames are no longer in alignment, is energy moving higher or lower? So let's watch that and tune out the internet, because there's a lot of opinions and everyone's going to say this has to do with today's crop. This could have a lot more to do with other things that we're not even talking about. So keep an eye on the energy builds as we fall and maintain consolidation. If consolidation deepens and tackles the weekly, do we have a massive bullish energy build as that takes place? Or is it apathetic? And if it's apathetic, it's even more concerning as the price comes down from the high. This is really how we look at corn as it moves through the evolution of the trade. If you have any questions, let us know. If not, there's a corn report that is ongoing. I'll leave it up inside this post if anyone's serious about it. We're going to talk about this and then some. We talk about long-term cycles there, as well as the complexion of the energy build, whether or not this energy build is weak or strong. There's all sorts of things we can look at. Corn's a complicated market, just like everything inside the matrix. It requires detailed analysis to properly understand. If you have any questions about any of this stuff, let us know. If not, thanks for watching, and we'll talk to you guys when the opportunity arises and we see something worth commenting on.